Welcome, everyone. I'm Angelo Robles, host of the Angelo Robles podcast and founder of Family Office Association. We're doing a special live meeting tonight. And those of you that are not live and are saying, well, I'm still watching or listening to it, it's because we decided to produce it as a private YouTube for select members of Family Office Association and some guests that I send it to. But it's very different than all the hundreds of meetings that I've done digitally and really enjoying it over the last 13, 14 months, how time flies. Many of you know I've been very intrigued in the world of investing in what's going on in what is called the digital asset ecosystem. On the surface, to many of you and me, even probably 6 to 10 months ago, that was heavily focused on Bitcoin. And that is really foundational in that understanding to the things I'm going to talk about. So you're going to have familiarity to some degree, I'm assuming, Bitcoin and Ethereum and some alternative coins about the power of the blockchain. But there's so much happening. I had JJ Sowers, who's joining me tonight, on as I think the first time I had him on in early December. And we spoke about NFTs. And I'm telling you, like no one knew what NFTs were then. And that opportunity, boom, it just came just like that. Now there's something else that's around the corner that might even be bigger within the digital asset community. But let me take a little bit of that step back and talk a little bit about what we're going to cover so you have a sequence for tonight, at least for our live audience tonight. The initial part of what we're going to talk about is going to be primarily focused on an education of the broad opportunity in the digital asset ecosystem, hopefully to make you realize the opportunities and challenges for not being familiar and aware of this community. And then we're going to talk about what we're doing at Family Office Association Consulting to really exponentially grow and to some degree handhold relative to your experiences and knowledge in this community. Okay, let us begin. And we're joined by JJ Sowers. JJ, welcome.
Thanks for having me. Thanks
Oh, it's
everybody for
always a
attending.
pleasure. So, I mean, I literally know hundreds and hundreds of people in this community, and I've been very, very fortunate to interview and get to personally know, including many others that at the moment don't want to be interviewed, but are among the leading figures globally in this community, not just in the US. When I'm asked in terms of depth of knowledge, as I'm going to say a futurist, digital asset thinker, I think the person right here, not me, JJ Sowers is probably the best that I know and has the most broad knowledge of looking forward into how things are going to evolve. He's a successful investor and very, very active in the space and even more broad than just digital assets. And I'm really glad to say that he's going to be part of kind of partnering, I guess you could say, in what I'm looking to build in Family Office Association Consulting. And in terms of my bench and Rolodex, it's pretty strong, okay, very strong relative to this community. And I was going to say it's going to come at you like a fire hose. That's not going to do it justice. It's much bigger than a fire hose. So there's lots of information. Let's see what we could do over the next hour. So why don't I start with, I became familiar with the community mainly through Bitcoin in 2013. I found it interesting, but I just wasn't ready yet. I went to a conference in LA hosted by a single family office. How about that? And it was great. And I became familiar with some of the early figures and thought leaders. And then just time went by. I got a little active, including purchasing in 2017. And then, of course, it goes down in value. And it really looked with the ICOs and all that, like I wasn't ready yet in my journey as an investor and someone who wants to be more forward thinking. And really before Bitcoin last year really took off, I would say around the Tudor Jones white paper, that was probably about a year ago, is when like, oh, wow, a fellow Greenwich brethren of such intellect and him and then Druckenmiller and Kathy Wood, like these level of investors. And then I really got to understand the deep macro thinkers in this community and a lot of the thought leaders. What I will add is it's not only those that are zealous advocates or impartial seeing the benefits of what I'm talking about. I purposely sought out the other side as well, and I wanted to listen to them. You've heard me say on my podcast before, in my little community in Connecticut happens to live Peter Schiff. Peter's a great guy. I've been to his home several times. I got to know his son, who's now famous as being incredibly pro Bitcoin, probably 4 or 5 years ago when he was 14, 15 at one of the holiday parties at Peter's home. And I think Peter makes some very intelligent arguments that are important to listen to. And we must not only seek confirmation bias, we must be open-minded. So I really immersed myself. I didn't just immerse myself reading, watching, and talking to the right people. I went ahead and did it. And I don't mean just going on Coinbase and using a wallet and buying Bitcoin and Ethereum. I mean much, much deeper than that we're going to get into a little bit, probably more so with JJ, about understanding blockchain browsers and wallets, integrating with something like a Uniswap, and the opportunity to have much more of a universe of what's going on. Coinbase is a tiny, tiny, tiny perspective. The things that we're going to talk about in the Metaverse, Web3, NFTs, and even social tokens, it's way beyond that. Eventually, that may catch up. That's going to be a couple of years from now, and the asymmetrical opportunities that are there now. And listen to every big macro thinker, Raoul Pal and the others. And that's specific to Bitcoin. Like, this is an incredible asymmetrical opportunity. What I'm trying to get to is the other aspects of this community, not yet as established as Bitcoin. Yes, it's weird to say established as Bitcoin, are frothy, are volatile, and potentially offer way more asymmetrical opportunity at this early stage. So I immersed myself. I did it. I acted almost like a cyberpunk, understanding the technology, understanding using of keys and wallets. And it wasn't easy, and I'm no spring chicken, but I picked it up after month after month after month. So this is really, to me, an exciting time. Decentralized cryptocurrencies, blockchain, decentralized DeFi, taking over from CeFi, that's centralized finance, the Metaverse, NFTs. And this is an important one. The government, obviously, they're going to have digital currency. It's, of course, going to be centralized. And really, that's what programmable money is. JJ has spoken about that on my podcast. And Mark Faber, who's probably like 78 years old when I had him on around Christmas time, even he knew about that. And imagine the government controlling the interest rate that you pay, taking taxes out for every transaction. I mean, there's lots of things that are on the horizon, and not all of it is pretty. So you need to understand a lot of these things relative to how wallets are going to move forward, government's involvement, and some of that is still a little bit in flux. What I'm going to do now is I'm going to give the floor for a couple of minutes of JJ to maybe set the stage a little bit with himself, his background if he wants, and really take what I said about my enthusiasm and excitement for this community and take it to another level. I'm then going to ask him some specific questions. We hope to engage the audience as well, and then talk about, in the latter stage, perhaps the last 20 minutes or so, more specifically, what we'll be doing at Family Office Association Consulting. And by the way, make no bones about it, this is volatile. Anything you do from an investing perspective, you could always lose your money. And for sure, the volatility, and henceforth, I guess, the asymmetrical bet. Now, again, what does that mean? I put $100 in, no leverage. All I could lose is the $100. My upside is unlimited. Now, they're going to tell you that about stocks and stuff like that. It's theoretically true, but I don't know. I don't see any big Fortune 500 company stocks just blowing through the roof at multiple after multiple after multiple. Do you want me to look at and tell you what's occurring in the crypto and digital assets community? It's almost unfathomable what's happened. Boy, it was a bad job on that one. since the first of the year, let alone looking back even 12 months. It's incredible, but no question, it's volatile. And I mean, like I kind of always say, you could lose all your money. But I think the old days of saying put 1% in Bitcoin and 40 basis points in Ether and call it a day, it's a little more complicated than that. And the opportunities are just so strong in front of you. Do you want to be passed by what's going on? I see this. I mean, I interviewed an institutional investor CIO. Those guys are going to take years to catch up. Family offices, ultra high net worth entrepreneurs and wealth creators are, I hate to use the word the risk takers, but the ones that know how to seize an opportunity and are willing to pay for the opportunity of getting the knowledge to be able to act upon that. And if you're a CIO and you miss out on this, you're going to be dated really, really quick. In 10 years, I don't think there'll even be a job if you're that behind relative to the things that I'm talking about. Is that opinion or fact? It's opinion. Who knows how that will go? On that note, JJ, I laid, as usual, a pretty long Angelo-like foundation. Why don't you comment on some of the things I said and give people a little bit of a glimpse of the opportunity of some of the things that I mentioned?
Yeah, so as a child, I used to read a lot of books, and one thing I learned, I think it was called Occam's razor. The simplest approach is the best. So I think for most, high net worth individuals, family offices, and people, especially if they're just getting, I guess, acquainted with the space, simplest is best. So I always say, there's a massive tailwind right now in blockchain technology and DeFi. And I asked three questions. So what's going to have the massive network effects? What's going to have those? So you have to ask yourself that question. And then I asked myself, what's going to get adoption? Because just because it's the best technology doesn't mean it wins. It's the one that gets the adoption. It's the one that has the community. And I also say, speaking of community, who's going to have the cult-like community? And I think we've all learned in 2021 that things like GameStop and Doge, the community does matter, even though it kind of seems like a joke and hard to understand. It actually isn't, because we're moving into a world where influencers are eating the world. This all kind of takes us into the creator space thing. And then I kind of say, too, when you take those three frameworks, you say, okay, so what sectors do I want to be involved in? And interoperability, DeFi, and then memes. Some people think it's funny when I say memes. As you can see, my background has some memes in it. But I think memes are important because the younger generation, Gen Z and younger, they really get memes. And to them, there's a meaning in that. It's just like even now with Bitcoin, you got all these people going around with the laser eyes, and people are like, what the heck does that mean? And it's all these people saying, basically, to me, it's a meme. They said it's a meme. And to me, it's like they're saying we're laser focused with our eyes. And a lot of people have turned the meme into Bitcoin to 100K. I'm not sure where this stuff starts or how it starts, but these things take a life on their own. And all these people, you see even Kevin O'Leary with laser eyes on his Twitter.
That was a shock.
You see politicians doing this now that are behind, Bitcoin and blockchain.
Yes, I believe Senator Loomis in Wyoming. Right.
It's just crazy how these things happen. And I always say, too, you kind of have to familiarize yourself with like subcategories, NFTs, the tokenization of assets, which is coming, and something called token sets and token baskets. These are all kind of the future. And it's interesting because in like the venture capital world, I look at these kind of like a mixture of venture capital because they're liquid venture bets with really asymmetric bets, but they're liquid. So I always say to myself stuff like, okay, so what's the technology inflection or the adoption inflection? So things like Chainlink were really important because back in like 2016, 2017, 2018, people were building these different decentralized things like decentralized exchanges, decentralized protocols, doing this, that, and the other, but they really weren't truly decentralized because the order book was centralized. But now that we have Chainlink, it made truly decentralized exchanges possible.
Absolutely.
And then there's things like Filecoin, which is an incredible project, but a lot of people said, okay, but there's friction, who's going to switch from Dropbox and Box over to this some decentralized file storage? But then when NFTs became mainstream, now we saw, wow, you really need Filecoin for the storage with IPFS. And there's even a saying now, not on IPFS, not your NFT. Because a lot of people don't realize when you buy an NFT, you're only buying a certificate of authentication on the blockchain. The metadata behind it, you don't actually have. So unless you store that on something like Filecoin, then you don't actually have it. It can actually be erased. A lot of people don't know that. So I think that's important. And I always say, too, you have to have a strategy, size accordingly. Like most family offices and individuals, maybe they only want to put 1% in just Bitcoin, nothing else. And that's fine, because I look at it this way. If you lose that 1%, it's not going to destroy your life and things of that nature. But, if the dollar or something falls 99%, it's awful good you had that Bitcoin. It was only 1%. If that goes up, 10, 100x, that kind of balances that out. So it's kind of the risk reward. Just make sure it's not going to change your lifestyle, ruin your life, or things of that. So I always say size accordingly. And a lot of people don't think about this: personal security. That's really come to light with crypto now that there was a hack in one of the hardware wallets where a lot of people's addresses, phone numbers, and things like that became public. And there's been rumors of home invasions and things like that. So you really got to think of your personal security. So even when you get KYC on these exchanges, you can think, okay, it's okay to go on these exchanges and maybe buy some Bitcoin, send some to learn how to use MetaMask, Uniswap, or even mint NFTs. But I just wouldn't put a lot of money on there in case they get hacked, because you don't want people seeing, hey, this person has this much value on this exchange. Oh, I bet you they have some hodl Bitcoin at their home too. So you got to think about things like that, and think about just a disruption in the future, how CeFi could be disrupted by DeFi, and people are building a lot of different things. So I always say you want to know why. Why is something important? I learned as a child. I've actually learned recently Elon Musk saying first principles thinking. I think that has something to do with physics or something like that. But as a child, in the books I read, all the very successful people were very curious, and they always asked why. And I always say, too, are these blockchain things solving a problem? Because nobody knows, out of the thousands of these now, literally, which ones are going to make it. And some people say, okay, maybe I should just buy 100 different ones doing these different things, and maybe 10 or 20%, like the venture investing, make it. That's fine. Some people say, no, I want to be more concentrated and have 12 to 15 bets. But they need to know why they're buying these bets. Is it solving a real problem? Why is it solving a problem? Does it need a technology inflection like a chain link, or some adoption inflection like NFTs, in order for what they're buying to really become mainstream? And there's a lot of great projects out there, and a lot of them are going to do really well as far as the token price, in a bull market, but maybe in 5 or 10 years, they cease to exist.
Yeah, there's a couple of things I want to dive a little deeper in JJ. He's just damn brilliant, isn't he? But he does go a mile a minute, even more than me. I want to take a step back and dive a little deeper into a couple of things. And by the way, we could do this for 4 to 6 hours. We're going to try to keep it about an hour. So there are some things we'll need to speed over a little bit. I'm sure you'll understand. And henceforth, that honestly, that really is going to be the value of consulting, where you're really getting our time and our team. I had one of my billion-dollar families, Angelo, we're in a special unit and division of whatever it was, JP Morgan and Goldman. And other than some broad use this for custody or this, there are layers of complexity, bureaucracy, and a way of doing things where, yeah, they may catch up on some of this in 2 or 3 years. And your RIA or MFO, are you kidding me? You think you're going to get knowledge from them on the things that we didn't even get into yet? You got to be joking me. You're kidding. If you're a wealth creator or a family office executive, now is the opportunity to educate yourself, think for yourself, learn how to form thesis, even basic. My son did one that was 1 paragraph. And you know what? It was succinct. JJ knows I'm too long-winded. He would be, I'm glad your son did 1 paragraph. Maybe he could do 2 sentences next time. You don't have to even put in what I put in. First of all, you're all probably smarter than me, so you don't have to put them in that amount of time. There's a couple of things you said. Early on, you said something that was so powerful. I actually think it might have went over a lot of people's head, and it's kind of giving away a little bit of a secret. What will get the network effect? What's going to get adoption? And here's a big one. What will develop a cult-like community? We do not want to do a deep dive into something like Doge. When I looked at it more seriously about a month ago, and again, I'm not a spring chicken. I'm like, you got to be kidding me. This is a meme from 2010 that the creators of Doge a couple of years later, as a joke and a spoof of Bitcoin that they probably didn't even believe in, did the Shiba Inu dog on a similar design as the Bitcoin coin, the image. And then one of the co-founders, there were 2, kind of for a couple of $1,000s, just gave up whatever he had. And now it is a crypto. It does have a blockchain. I don't have details on how great it is, but here's what it does have. It has a community. These young Gen Zs, I'm telling you, and they're massive in numbers, and the younger millennials under 30, they get it. They believe in memes. They believe in community. 100% they do. I'm going to tell you a little story that I said on one of my other podcasts last week. I don't know why, but I have a polka dot shirt. We'll get into that a little bit later. Polka dot, Bitcoin, and Ethereum. I've never been stopped wearing my Bitcoin shirt. I got my Ethereum shirts, t-shirts that I work out in the gym with, or maybe after that I go to a store. I've been stopped multiple times. Every time it's someone from about 17 to 23, 24. And then I'm talking to them because I want to get information. Some of them I exchanged my Instagram and we keep in touch. Like I test them. Do you use blockchain browsers? Do you know how to use Uniswap? What are you doing on NFTs? What do you believe about social tokens, about Doge in a community? One kid making like $12 an hour already made tens of thousands of dollars in Doge. Do I completely get Doge? No, not really. It's a little weird, the whole meme thing, but it's not whether I get it or not. It's there's a very, very powerful community behind it. So you have to be more open-minded, open yourself up to things that I know don't fit the traditional paradigm that you might have learned in business school or in finance. And I dabbled a little bit in Wall Street in the 80s. This is a different world, but I like those things you said. I look at this as being, there's going to be trillions, not billions, trillions of dollars that are going to be created. The next Amazon, the next great company is going to be built on the kind of decentralized platforms that we're talking about. They might even be the death of certain companies. And I spoke death, a strong word. But if those stellar companies and the FANG and others don't evolve, and we mentioned one that we think may get a little rocked if they don't adapt relatively quickly. I've mentioned that in other podcasts before. There will be some massive, massive winners in what's going on here. The world can't get a taste of digital and then go back to analog. You're kidding yourself. It's not going to happen. I mean, I'm not saying that I'm some kind of a futurist, but I just see tremendous opportunity and volatility. I had Plan B on. I know if you don't know too much about this community, Plan B, who's that, Angelo? Look it up, enjoy my 2-hour interview with him. And he's like, hey, most of my net worth, and I'm assuming it's rather very significant, is in Bitcoin. But yes, Angelo, if I follow the cycles, it's probably going to go down and possibly go down a lot at some point, probably next year or early the year after. And of course, my question, what are you going to do in hedging? And he's going to do some, but basically I'm a long-term holder. And I believe this $1 trillion asset now between years 2024 and 2028, and him talking that he's a pretty influential figure. Oh, it's going to surpass the market cap of gold. And I've had people tell me they think it could make a run at the market cap of things like oil and real estate that, I don't know, maybe like 90 to 100 trillion. Is that a little pie in the sky? Is that 90 years from now? Is that 8 years from now? I can't say that I know. And you're going to have to form your own thesis. And many of you make your own decisions. Some of you may want to look at it as Bitcoin, somewhat store of value like digital gold, Ethereum, maybe more like oil or the railroad tracks for the railroad. That may be a good way to look at it. NFTs are digital certificates of ownership and include art, music, and memberships. It's much more than just art. Don't think it's just art. And as part of that community, a little frothy, I'm going to go like that? Of course it is. It's early. You have to have the stomach, in my opinion, to make the right decision and stay with it. The only reason to get out of something that you believe in, and JJ, let me know if you feel differently, is if your thesis completely changed, which is possible, I understand, or there's something noticeably better that you want to take money out of and put it into. You're a good thinker about those kind of things, JJ. What would you say about that?
Yeah, I would say definitely, obviously, the reason to sell something isn't necessarily because the price went down, not just in cryptocurrencies, but in the stock market, in anything. So, if a better opportunity comes along and you need the cash for it, obviously that's a reason to sell. If your thesis has changed, or if you say, hey, I was just flat out wrong about this. I thought XXX was going to happen by a certain time and it didn't happen. We never got the adoption inflection. We never got the technology inflection. Maybe you saw then. Oh, I just had something pop in my head too when you were talking about digital ownership, that NFTs could be digital swag, to make it a shorter thing. Like they say, digital gold, digital oil, digital swag.
Yeah, the world is changing. I don't want to make it too much a little scary or a downer, but many of you have reached me offline and say, Angelo, I think I get it. I want to kind of be at least, like you said, 1% Bitcoin, 40 basis points in Ether. And I almost don't know where to start. Do I go on Coinbase? Do I do a Coinbase institutional? How about another platform? And, I read you and JJ, your white paper and other material, but I don't know if I quite get, like, it's on the exchange. Do I leave it there? Do I put it in a wallet? What type of wallet? And even what we wrote 5 or 6 months ago, still darn good, but a little bit dated. And some things will need to be updated because this community is moving so quickly. There's not an ETF yet. And again, there are going to be people just like the gold people. The gold ETF is not the same as owning. Now, the hardcore Bitcoiners will say no keys, no Bitcoin. They're usually very libertarian, very maximalist, and they're even concerned about custodians. Like, well, what happens if something goes wrong in there, or the government freezes them, or the government turns on me and freezes my account? So there are people that are going to think like that. They're not necessarily wrong, but then they're going to need to be educated on some of the things that you hinted at. You do understand buying on a US exchange, KYC, know your customer. You're kidding, you're fooling yourself if you don't think the government knows who you are, especially now during KYC, and especially if you moved, quote unquote, your Bitcoin or cryptocurrency. But the one thing that you said that might have got some attention a couple of minutes ago is, okay, if I want to use a hardware wallet, did I just hear JJ say that they could get hacked? Now, here's what he means by that, although there's lots of things that could go wrong. So you need to have the right people guiding you in some of this for sure. The wallet companies that you often have to download updates, their database gets hacked. And now bad guys and girls could see, ooh, so now we have this person's name and address. Maybe we could triangulate the size of their Bitcoin. Maybe they're one of those people that doesn't trust governments and institutions, which is a lot of people, and want to keep a big amount in their home. And there have been home invasions. I haven't really heard of it happening in the US, but that doesn't mean it can't. So all this stuff has scared away some of you. I went through the process, so I understand it is a little scary going through the keys and all that. What we would probably recommend for many of you that are going to be more substantial investors is use the over-the-counter at obviously an American exchange and custody at a extremely high quality custodian, NYDIG, possibly Fidelity. You have to know who they are. We know them very well, know the nuances, and know that's not without the slightest bit of risk. What happens? It's buried in a mountain somewhere in Colorado. If the Yellowstone Park blows up and it gets buried, is there a backup? I mean, there's, well, if we lose electricity, then we're really in a lot of trouble. A lot of things are going to go off. But yes, you are right to be concerned about security with your computer. We're not going to dive too deeply into how to structure that, how to use Faraday cages and stuff like that. We are going to save that for more of the private consulting that we're going to do, that we'll get into relatively shortly. But I felt that was important to bring up. I'm going to ask you a couple of questions, JJ, probably some of the things that I would recommend someone who wants to be more active in this ecosystem, that they become familiar with, even if they elect to only be institutional level ownership and custody at Bitcoin, Ethereum, and invest in the ecosystem through private equity and hedge funds. And that might be the right decision for some of you, I get it. But even then, just like as opposed to reading a book about baseball or even watching it, if you're interested, immerse yourself and play. And there is a difference. Talk a little bit about the importance of blockchain browsers and combination blockchain browsers and wallets, kind of like MetaMask, and why that's important to at least understand how to use it.
Right. So to me, to understand something, you actually have to go through the process. Now, I'm not saying everybody should go through the process and then buy all kinds of coins and do this, that, the other. But, just download the MetaMask, go through the process of sending some ETH there. So you've sent ETH from one place to the other, so you can even see how that works. And then go onto the browser and load up like a Uniswap or a Balancer or a Sushi Swap. just to even see how that works. And then if you want, you can even go through the process of purchasing one of the tokens, one of the altcoins they call them, just to see how that works. And then you can even see if it's one of the ones that's not in the list, you can see how to add one, get the 0x number, which is a smart contract number. The reason it's important to learn this process, because you kind of get an idea how the future's going and how things feel. And just like, with NFTs, you could even go on Rarible or OpenSea and mint your own NFT just to see the process. Just go, wow, this is pretty cool. And also, a lot of this stuff I do recommend if you have children are fun things to do with your children. Kind of spending time with them, learning something, it's pretty cool to do that with your children. And it's just kind of educating them towards the future. It gives you kind of a different perspective. Wow, this is where things are going. Wow, this DeFi stuff may actually disrupt this CeFi stuff. It's not just a lot of talk. And it's pretty cool too, because Uniswap is truly a decentralized exchange, and they're using automated market makers, which are using smart contracts to do the market making. So it's not people involved like they used to have back in the day, I guess, on NASDAQ. I heard a lot of it's computerized now, but they used to have, literally market makers on floors and specialists on the New York Stock Exchange. Well, now this is all done through a smart contract. It's truly decentralized, no centralized order book. And you can definitely know it's decentralized because you could go on Uniswap if there's a pool, they call them pools, that someone has created with a token. It may be a different price on Uniswap than it is on SushiSwap or Balancer, depending on the size of the pool and liquidity. So it's truly decentralized, and there's a lot of truly decentralized products being developed. I mean, anything you can think of in the Wall Street financial markets, people are attempting to build it in the decentralized markets.
Yeah, I mean, why don't we dive a little bit into that? Now, we're going to get a little deep on some stuff that is, very deep into this community. And this is early stage. That's where the asymmetrical opportunities are. And I'm telling you, if you have children and grandchildren, do they play Fortnite? Do you own the public company Robles? I know I do. What's happening in kind of the virtual universe, what could be defined in this community, what I'm looping into the digital asset ecosystem, is the metaverse. JJ, what would be a relatively simple definition of the metaverse to you?
So to me, it's kind of blended now, even with AR and VR is part of the metaverse. But to me, it's almost like your alter ego, or like back in the day, they had this thing called Second Life, where you can go on these things and you can actually create characters and name them. So that's pretty cool. I mean, there's people creating games and adding them in sandbox and things like this. I mean, you can buy land virtually and actually develop it, put things on it. I mean, it's incredible.
Now, that's going to sound, everything you just said is going to be like, people are like, wow, like, yeah, I see my kid play Fortnite and they use these skins and they buy these skins. That's how Fortnite makes money. There's going to be a day when you own skins and you rent them out to other players. There's going to be your 13 and 14-year-old maybe finding ways to creatively make money that you could exponentially grow and scale in ways that you don't know. So what did you just mean by what you said? Kind of the metaverse, real estate and land, like what? Like people are buying this in a virtual community for what? Like a penny? For $100? What kind of money are we talking about right now?
Oh, yeah, it's no longer a penny. So one thing people got to realize too is a lot of this stuff is priced in its native token. So in the sandbox, when you buy some of the things on the sandbox, your axe is priced in sand. So you have to have the sand token to buy it. So whatever the price the sand token is at the time, and if it says 100 sand and sand's 50 cents, then you can do the math of what it is in US dollars. But the sand token, the price is moving up and down all the time. Fluctuating. And a lot of these tokens and these metaverse things have gone up a lot. But you know what I find interesting too, and kind of a little peculiar, that people are now creating these AR, VR type things where, like, say, the Golden Gate Bridge, it has a latitude and longitude. And inside this game, you can buy that land virtually and then you can mint a token. That's also why it's another reason you should probably learn how to use MetaMask and mint these tokens. And you can mint a token. So I find that kind of interesting. And several games are doing it. And I'm like, wow, this goes into, well, do people really have, if someone owns the actual land, do they have the IP right? Can someone just sell you the token? I mean, there's no rules, so nobody knows. But here's the funny thing. Some of these things are selling in the secondary market for hundreds of thousands of dollars for some of these ones that
I know for some of you and me, this is a little hard to believe. This is happening and it's really early stage. Now, we went very lightly into the metaverse in things like master classes and one-on-one. There'll be a deeper dive, but let's jump ahead a little bit. It almost sounds like old news now. We got on it pretty early, talking about it in December, but talk a little bit about NFTs.
Yeah, so non-fungible tokens. So they're not new, contrary to popular belief. But for whatever reason, in I guess January of this year, they started to get more notoriety, and then they became really popular. So I'm of the opinion, and I could be wrong, because of NBA Top Shots, people really got into it. And the thing that NBA Top Shots did right is they have a centralized platform, with Dapper Labs. You go on and you can purchase these Top Shots, and they give you the option to use Ethereum, USDC, or you can actually use a credit card. And they made it real easy that you didn't have to download a blockchain browser. You didn't have to have a blockchain wallet. You didn't have to have private keys. So the average guy who just likes NBA basketball and thinks it's cool could buy these moments. And the moments are cool because it's actually a video of somebody, blocking a shot, slam dunking a ball, making a steal, throwing a pass, or all of the above. I mean, it's pretty cool. And some of these have been sold at auction off the platform for like hundreds of thousands of dollars, like a couple 100,000 and things of that nature. So that's just insane. And also, too, there was this guy named Beeple who isn't a new artist. He's been doing this thing called Everydays for like over a decade. I didn't even know it was a thing. But that goes back to the community and a cult like following. Inside his own community of Everydays, he was like a famous superhero guy that, most people had never heard of. And then he created some, artwork that were NFTs, and they were auctioned off, I think, at Christie's. And the first one was only a couple of $1 million. But what happened was it was 20 pieces of art. I think it was a couple of million. And then these people, what they did was, who bought the art, they wrapped the ERC 721s into this token called the Beeple 20. And they sold it on things like Uniswap and things like that. And the market cap at one time went crazy, like to well over 100 million. And now it's come back down to earth, but it's still well over the 2 million that they paid for the art. And then following that, there was more frenzy. Some guy bought some real life painting, made an NFT, made a YouTube video or something of him setting it on fire. And then he sold the NFT for multiples of the real work art. And then it built more momentum, which is even crazier. So this Beeple guy made another everyday thing of art. And it sold for like 69 something million. I think it was actually 60 million or something, but Sotheby's takes a cut. So it took it up to 69 point something. And then it just created a frenzy because then everybody started knowing about it. And I've always said that NFTs, the technology, can do a lot of great real world stuff. So one thing for artists, it's great that they can get, a residual. Now, right now, it's not the smart contract, but on these platforms, and a lot of them work together, if you create it and sell it to Angelo, then, they get their cut originally, obviously, and the platform takes theirs. And then if it sells to someone else, the artist might get 6%. And then it sells again, they get another 6% off of that sale. But I really think this is a great usage in music, because in music, a lot of performers have never really gotten their just due, and you use the record labels and they take this big cut, and they have a big marketing machine. But now, and it goes back to the theory, if you only have like 100 true fans, if you're a musician or an artist or even someone like Beeple before he was known, to your 100 true fans, you can sell all these different NFTs and literally making hundreds of thousands of dollars a year. And this kind of dovetails into social tokens, where you actually have a special club where they have to hold so many of your tokens and have special chats on Discords, even get access to special NFTs and drops. And it even goes from analog to digital back to analog, where somebody is basically buying the tokens, getting the NFT, and then they can redeem, or they actually, for buying the tokens or a certain NFT, get the real world thing too.
Now, I wouldn't say we want to give away too much, because we're coming pretty hardcore, and I probably have 6 or 7 other things I want to ask you about before we even really get into deeper on the consulting part. But everything that we're talking about, we're looking to develop, programs with me and JJ and perhaps others for group, for one-on-one. We do want to do perhaps a New York City or Florida one-day boot camp. And by the way, I think we could teach you, I don't care how old you are, how to use MetaMask, how to use Uniswap, how to create your own NFT. Even if you're not technologically savvy, we could do that, and you'll have a better understanding and immersion in the community. But more to come on that a little bit later. Let's talk a little bit of what you and I think could be like the next big thing, like NFTs, whatever, 5 or 6 months ago, which means it may be old news in 5 or 6 months. Now may be the time to be more familiar with it. Evaluating and investing in social tokens.
Yeah, so social tokens, I definitely think is the future, but it's going to roll out different stages. I think a lot of people have heard about BitClout now. So that's basically based on social tokens, because, anyone who creates their own profile has a social token, and different people, having different values in there as being bought because it's done on the bonding curve. But I really believe the future is social tokens for creators and even just club memberships. There's actually, and it's not even a social token, this thing called the Meta Factory, where the token is called Robot for whatever reason. And people who create like art, they put it on t-shirts and jackets and shoes and all these things. And one of them, you have to be, had to buy this NFT membership card in order to be able to purchase their clothing. And then there's others, if you have 10 robot tokens, then you get first access to the drops. And these are like super cool clothing. I mean, it's incredible. I actually believe the future swag is going to be, the high prestige items are going to be some of these NFT type clothing that are like one of a kind or one of 10 versus like nowadays, how in the older generation, it's like the Rolexes and the Brioni suits and the Tom Fords. It's actually going to change to these other types of goods. And another thing,
completely.
too, people don't think about
what those young people who stop me and I ask them these things, by the way, that's it. They're not into the Rolex watches, and there's always going to be exceptions. The things that JJ's talking about are what these tens of millions of young people who are going to be more and more powerful, influential. Some of them are already incredibly rich on paper, and some of them even have tens of thousands to hundreds of thousands, like the person I know making $12, $13 an hour. Kudos to him. Didn't even plan it that way, just believed in some of these things. And timing, and again, we all look great and smart during a bull market, right? The stock market, what's going on in digital assets, there's no question there's going to be this and that. I'm telling you, I understand that. But when you look at it, in my opinion, both in the now and the near future, I mean, these are just things that you need. You got to change that mindset. Oh, I'm too old for this. Let me just settle for the good old S&P 500 and bonds. I threw that one in to make you all laugh. Bonds, are you kidding me? I mean, come on. There are some nuances and secrets that during something like the masterclass, we're going to show you, and I could probably teach you it in 2 minutes. That would probably pay for the masterclass 2 to 50 times over, depending on how much money you're putting in. I don't want to give too much away, but it's relatively simple and easy. I actually have mentioned it before, and of course, none of you ever followed up on it, or very, very few of you did. Let me just go round robin on a couple of things. Let's go back to decentralized finance, which I'm really big on. I think just, there's no question, you're being very kind, that's going to disrupt CeFi, centralized finance. How could an investor, a family office, be prepared? In other words, how could they profit?
So one thing too, as far as things that are coming, another thing is the tokenization of assets. Now they've been talking about that for years, and some people have attempted it. But if you're a family office and you have some liquid piece of real estate, you could actually tokenize that real estate and say keep 20 or 30% still and sell the other 70% off out of even a multiple of what you originally bought it at. So that's one way to get liquidity. Also, too, it's kind of starting to catch on, is this thing called token sets, and now some people have renamed it token baskets. And it started out in DeFi, decentralized finance, where people were kind of creating like their own, they weren't necessarily exchange traded funds because these aren't stocks, but they were taking like different DeFi tokens and saying, okay, this is my DeFi index. And they put a bunch of these tokens in this index and sold it as one token. So it has a certain percentage of this one, another percentage of this one, depending on how they did it. And then people got more creative and started doing things called, they call them token baskets, where they're taking NFTs. So I believe the future is this is going to allow people to say, if you like a certain artist, you will be able to invest in them via a token basket, and also a collector. So not just the artist, so a group of their artwork in one token. Also say someone's a collector and you say, oh, I like all that crazy shit that this person's collecting. You'll be able to actually buy a token that represents that stuff. And actually someone did kind of do this in social tokens. There's this thing, and the guy's anonymous. That's another funny thing about blockchain. There's a lot of anonymous people. He did this whale token, and it's actually backed by a bunch of NFTs that he or she had accumulated through the years. So that's kind of interesting. It's also interesting in this space too. In DeFi, a lot of the terminology is like not clear. Like when some people say Web3, it's a broad term. They only mean one thing. And just like layer 2, layer 3, it's kind of gets a little bit mixed up what layer 2 is and what layer 3 is. Because to me, layer 2 is the application layer where people are building, the decentralized apps, and layer 3 is interoperability. But someone told me that in pure computer science, because I'm not a computer science major, that's layer 5. And they told me there's even a layer 4, the transport layer, which nobody has even really mentioned in the blockchain world. So it's kind of interesting, all the like terminology getting confused in this. But one thing that really helps for family office is just getting educated on this stuff, how what means something in one world doesn't mean something in another world. And even in the same world of blockchain, everybody doesn't mean the same thing. And when you Google stuff like layer 2 or layer 3, for instance, for Bitcoin, stuff will come up for like Lightning Network for layer 2 and layer 3. I get why it is, because it depends on what someone's building, but it's a lot of confusing with the liquid network and things like that. And I do believe too, you had said there was someone who had a question about platforms or something being built on Bitcoin for layer 2 or layer 3. So I'm not 100% sure of the context, but to kind of answer their question, there is this thing called Sovereign. It's kind of interesting. It's ties into DeFi is why I'm bringing it up now. So this is a DeFi platform for Bitcoiners. And they have either attempted to, or they're doing this, deploying smart contracts secured by Bitcoin merge mining. So most people are familiar, can read about regular Bitcoin mining, but merge mining is kind of interesting because it's the process of mining on 2 chains at once. So this kind of happens on what they call a side chain, on the Bitcoin side chain. And just to give a brief definition for people who aren't familiar with side chains, that's basically just like a separate blockchain that's attached to the parent blockchain, or some people, I think they call them like the main chain, using a 2-way peg. So I guess in simple language, it's basically moving assets to the side chain and then back to the main chain or parent chain. And basically the goal of this project is to build, an EVM, which is the Ethereum virtual machine compatible smart contracts secured by proof of work, to bridge the Ethereum dev community to the Bitcoin community. So this kind of ties into it. It is layer 2 because they're building, a DeFi platform, but it's also layer 3 when you go into the bridge of interoperability is how I view it. Now, some people may view this differently. Now, one of the advantages, of working with a service like Family Office Association is there's a couple of challenges. First of all, Ethereum is moving to proof of stake. So if you're trying to bridge something where it's using 2 proof of work things, well, if something's moving to proof of stake, that might be a challenge. And also, too, Bitcoin is not Turing complete. Ethereum is Turing complete. And it's very difficult.
You are getting very deep, my friend.
Yeah, I'll go real quickly, but I'm trying to help answer that guy's question because his question was a little bit, I guess, higher level. So it's kind of in that. So I'll just cut it off there. There's a lot more to it. But if somebody were to, go into consulting, these are the kind of things we could definitely help them with. And I hope this helps explain the other guy's question. And there also is, real quick, on layer 3, there's this thing called RIF Labs, which is the parent of RSK Labs. And they're building several projects that they're calling layer 3. One of them is called the Lumino project or something like that. And it's similar to the Lightning Network, and it's using state channels. So I don't know if you want me to define state channels real quick or just end it there.
End it there. We got to save some secrets for the masterclass. Like I said, this is way bigger than a fire hose. I gave you that warning earlier on. We are still mapping out, at least at the stage we're doing this live with an audience, quasi a beta, in terms of the different layers of consultative services that we're going to offer. One of it may be a 3 to 4 hour group masterclass. A level above that is one-on-one with a block of 10 or 12 hours. A layer above that could be that, plus a 1-day immersion in New York. And we thought about what we could do with like a 1-day immersion. It's a lot. Learning how to use blockchain browsers and wallets like MetaMask, how to use Uniswap and purchase crypto and things you have no chance of getting on CoinDesk. Any of those platforms that are out there, how to secure your identity and name. I think that might be important for just some of you, of course, discussing custodial options. And we didn't even get into, which we could cover in that 1 day as well. And I've went through this as well. Secure your name and other quote unquote real estate in the blockchain, the way that you do as a .com and a .org. There's a very simple way to do that, and then how to claim it. And that's where you got to know a little bit of doing the right thing here. And if you're sending or receiving crypto, Bitcoin, that makes it way, way easier. Everything, including websites, are going to be moving to the blockchain. So securing your name now, and your kid's name, your grandkid's name, for what, like $70 a name one time? That's a no-brainer. But we'll help you learn how to do that correctly, how to interact with the metaverse, understanding NFTs. And I think for some of you that may want to go into the breakout room, I think we could do a little something where you actually create your own NFT. Who's going to buy it? Probably no one, but you'll understand the experience of going through it. And again, immersion is often the best. And how to evaluate and invest in the next big thing, social tokens. And again, some of you may walk away from this and say, I get it. I'm going to be institutional level Bitcoin, 1 or 2%. Whatever, 50 basis points or 1% Ether, and I'll dabble in some hedge funds for other exposure, and that's it. I think that's better than nothing. And if that's the conclusion and thesis that you came to, then for you, that was incredibly worthwhile. And again, there's also a couple of things in a couple of minutes we could teach you that will be incredibly valuable from a profit perspective, putting real dollars in your pocket relative to your crypto assets and your cash. But enough about that. I do want to ask you, it's going down an interesting path. We mentioned it with the memes, and it's a little like, do I really get it? And that would be Doge. But what I would recommend, and something maybe that one day immersion that I'm talking about, it's not just a wealth creator. It's not just an investor, a hedge fund manager. We would be great for that as well. It's your children and grandchildren. So they're going to get something like a meme and a community like Doge. We're not going to get it, even though I own some. I don't really get it. Maybe I'm caught up in the FOMO and all that. But I mean, who was it? Peter Schiff that said, "Oh, this is the new store of value," being a tongue-in-cheek play when Bitcoin was down a little bit a couple of days ago. Although maybe to the younger ones, that might actually be a true comment. So I would probably say your kids would feel interactive in something like Doge. And maybe it's 500, 1,000, 2,000. I'm not talking a serious play in it. Oh, and by the way, if you think for a second, I mean, I'm based in Greenwich, Connecticut. I know hedge fund managers. I've been interviewing them for 12, 13 years, the biggest names on down. Yes, they're some of the ones moving the Doge market. Whether themselves, their young analysts they're hiring, these long, short, macro, depending on their flexibility or through their personal accounts. Ask my friend Dan Tapiero, who many of you know. That's a great friend of Raul Paul's. And that guy worked for the legends of the industry. They're all beginning to understand this and be active in it. Mention a little bit about DFINITY. Or other decentralized Web3s. And I did mention earlier how potentially that could disrupt something like AWS, JJ.
Yeah, so DFINITY is the decentralized web, basically, of Web3, to use a broad term. But that's basically the decentralized version of AWS. And supposedly, DFINITY is finally going to launch everything in May. And if at the current price that the futures token or the IOU is trading at, it would already be a 72 billion market cap. Now, who knows if it launches at that? But if you go by the IOU price, it's like a 72 billion market cap already. So there's a lot of very smart people involved. They have incredible, venture investors behind them. I mean, a lot of times these things don't necessarily launch at the futures price. Like, for instance, Coinbase, before it was trading, on the exchanges publicly, it was actually trading a token that didn't have any shares backed by it, but kind of like a derivative where people were basically betting on the price on an exchange called FTX. That we can't really access that type of part in the United States, but they do have a United States version that's much more limited. That people trade all kinds of things. They're trading Tesla stock, and it's not backed by Tesla stock. They're trading MicroStrategy. They're trading all kinds of stuff.
Some crazy things out there around the world. Yeah, I mean, I'm really intrigued by DFINITY and what's going to happen there. And again, this is a chance to be early on. Okay, maybe we're a pinch too early. It's going to happen. It's not going to take 20 years, by the way. You're just fooling yourself. Actually, a little bit on that note, and related to the young ones that I mentioned, JJ, you have a saying. So I would say I recommend some of you, I know this is going to sound a little weird, but do follow me on Instagram. I actually am allowed a little more creative freedom on there with some of my content. And I'm actually releasing some early content a day or a week before I normally even talk about it or put it on really anything else. And I have something up there now that's part one of probably a 3-part series that JJ and I worked on. It's my latest post. I'll probably do part 2 in a couple of days, then part 3 a couple of days later. It's like 15 questions, really hyper creative, that you should be asking yourself, your children, your family office. And pardon me, before I didn't even mention about the masterclass in this, institutional investors, get a head start. I already mentioned hedge fund managers. I mentioned the children, the wealth creators. How could I not mention, among my favorites, the family office executives? You have a chance here to do something, even if it may be your own capital, but you don't want to be left behind. You want to understand the things we're talking about: MetaMask, wallets, Bitcoin, Ether, DeFi, etc. At least to form your own thesis. And it may be, I'm going to step away and not do anything for a year or two, but at least you put in the work. Don't be like the billionaire that I interviewed 3 or 4 years ago. Oh, this is bullshit. He just said that because it was rocking his establishment in banking, finance, and real estate, and put no time into it at all. It was just a random comment. There's lots of people, multifamily offices, even RIAs that are not quite ready, but they could get the knowledge now and maybe in their own account, but eventually be prepared to work with clientele. But one of the questions that I talk, and my Instagram, by the way, is very simply a company name, so it's a little long, Family Office Association. Again, Family Office Association. One of the questions that I posed there is one of yours, and I love it. And it's a little hard sometimes to pose verbal in reading it, so you'll give context to it. What would you do differently? Let's use you, JJ. What would you do differently if you were 14 years old right now, and magically your current self could talk to your 14-year-old self now in 2021, and your older age is going to give you better pattern recognition? What would you tell your younger self to do?
Yeah, so I would definitely say, with the time and pattern recognition and experience I've had, over the years. So I'd say to myself, what would my 14-year-old self be doing, like even today? So that's what gets me involved, looking at the meme community, the social tokens, the metaverse, things like that just seem for someone of my age, a little bit nuts. And if I was 14, I would definitely be like, wow. So I'd figure out, what do I really want to do with my life and what do I enjoy? So if I'm the kind of person who enjoys music and arts and comics, I'd really be learning about how NFTs and how can I apply this and just get my fan base with, influencers eating the world, just 100 people who really love what I'm doing. I don't need 1,000 or a million, just 100, and focus on that and really build that community, and then give them the access and the things they need, even as a 14-year-old earning revenue, hustling to even build up bigger and bigger, and then taking some of that and investing in crypto type things, participating, and just learning more and more, because the best investment is in yourself, and learning as much as I can about the entire crypto ecosystem, because this truly might be the new stock markets. I mean, Bitcoin might be like the new Dow, that the price could be $1 million one day. And
stop there for a second. This is really important. Doesn't, not that you're like whatever, 100 and gazillion years old, but I'm assuming what we're going through now in Bitcoin and digital assets, is it a little bit like the early days of the more established stock markets? I don't know, 110, 120, 130 years ago. Those first 10 or 15 years are incredibly frothy, but loaded with opportunity. There's just not a lot of efficiencies yet.
Right, and I think the volatility is where the opportunity is in a lot of these things, because back in the day, I remember reading about this guy named Jesse Livermore. He used to trade these things called the bucket shops back in the day that weren't even official exchanges. And I kind of look at some of these off-the-wall exchanges as bucket shops even. You could even argue, even though they're very legit, some of these decentralized exchanges are like the early bucket shops, because eventually there's going to be decentralized exchanges that are even official exchanges now. Like maybe one day the NASDAQ trades cryptocurrencies in a decentralized manner, where you self-custody in your own wallet, and it's truly no centralized order book, that it's truly decentralized, and there'll be decentralized settlement, decentralized derivatives, all of the things that are in traditional financial markets. Some people call that traditional fi or tri-fi or something I heard someone say. It's all going to go to the DeFi world. So I really think that's important to know. And also too, this whole industry is so young that what if the whole industry, not just Bitcoin, but the whole crypto industry goes like 140x or like 500x? So the reason I say 140, because I looked up the entire global real estate market cap is like 280 trillion, I think. And the crypto, according to coin market cap, is approximately 2 trillion, a little bit over, a little bit under, depending on what the price of everything is at the time. So if you multiply that, by 140, that's 280 trillion. And I kind of put that to that because the government says like Bitcoin is kind of like property. So, real estate property and the new property, crypto property. And I say, we know the derivatives market, the notational value of all derivatives is like $1 quadrillion. I mean, an enormous sum. So I was like, well, what if the entire crypto market is like the new derivatives market? Then you have to times it by 500. I know that sounds crazy. That's $1 quadrillion for the whole market cap.
Yeah. And, some of you have said, well, what is DeFi going to do to banks and institutions? Well, some of the most classic globally powerful banks and people behind them, I mean, they're kind of part of the plunge protection team. They're the movers and shakers. They're not going to go anywhere. They'll adapt, maybe a little slowly sometimes, but the smaller players, the intermediaries, and many in the world of finance and banking, if they don't see the writing on the wall, I don't know what to say. But they do have a chance to adapt. They do have a chance to be part of this ecosystem that now employs tens of thousands of people, a lot of people that are smart, wealthy, and active, contributing to the tax base. And trust me, the government's going to want to tax this on some level, like you were hinting at, like real estate, some kind of a property tax. Oh, they're going to profit from this. This isn't going to go nowhere. It's just going to be taxed a little more than perhaps we would like, but that probably is a trade-off that we'll just have to take. So that's an interesting idea in terms of what you would tell your 14-year-old self. I'm going to talk a little bit, like some of you know that I talk about this with such passion because I'm really 24/7 dedicated to it. But make no bones about it, being founder of the Family Office Association and doing what I've been doing and what I love to do 24/7 in the world of family offices. I love what I do in my master classes and programs on creating or reinventing a family office. And sometimes it incorporates some of the creative thinking and even digital things that we're talking about here. Technology in family offices. I'm very big on asset protection, on tax. Don't think that we are not fluid, even though we've been spending a little more time in the digital asset ecosystem. I mean, I'm on top of that stuff 24/7. I don't even know when I sleep. And I have multiple master classes and even consultative services that we rolled out in that aspect of the community as well. How to build an international family office with asset protection, tax strategies, really complex. We have one multi-billion dollar family about the benefits of owning offshore banks in Switzerland and insurance companies and how crypto plays into that. Lots of things. Again, some of that I have to save for my consulting clients that really do get the couple of times a year that I could engage a lot of my attention. But it's not just digital, but I'm really, really excited about the digital for all the reasons that you're noting. For those of you that this is a little newer to, maybe check out, if you haven't yet, on my YouTube platform, which simply is Family Office. So you'll find me. My Michael Saylor interview, that was a pretty intense hour and 30 minutes, and how that guy thinks, and talking about thinking for yourself. And he went to MIT. Wow. And the mysterious plan B that I mentioned earlier. So even if you're more advanced, I think you would get value. And if you just want to email me, I'll send you the links. That will be more than fine. JJ, you said something, and I'm going to include it in my part 3 when I post it in a couple of days on Instagram. I'm going to read off the top of my head. It's going to relate and tie some of the things we've been talking about. The super rich who don't adapt relative to their current wealth and status, to understanding what's coming, we didn't even get into, with central bank digital currencies, programmable money, crypto, blockchain, DeFi, the Metaverse, social tokens, will become merely rich over time. Now, the time may be decades, I'll give you that. while the cyberpunks and the early adapters will become the billionaires of tomorrow. Do you agree?
I think that definitely could happen. It's a danger for those who kind of get left behind, for lack of a better term, because it's kind of like if you don't roll with the change. I think someone told me when I was growing up, the change rolls over you. And I kind of look at it this way: like if you look in history, like 20 years ago, some of the top companies in the S&P 500 or any of these indexes aren't the same top companies as today, outside of Microsoft, who's still one of the top 10
Outside of
market cap
Microsoft,
companies.
yes, I talk about that all the time.
It's very possible too that somebody has 100 million now, maybe they still have 100 million in 20 years, but relative to what that's worth today, it'll be a pittance because someone else will have a billion,
Yes.
10 billion, 100 billion, trillion. So it's just like now, for instance, let's say if you retire because interest rates are so low in the 10-year, like, I don't know, 1.5-ish. So in $1 million you would get, say you had your 401k, and let's just say you didn't have any tax because it's tax deferred, so you actually do have tax, but let's just pretend you didn't for easy numbers. And you could earn 15K a year off of the 10-year treasuries. Well, you can't really live off of that. So even if you had $10 million rolled over and we're getting 150 a year and then still paying, you still pay tax on the US Treasury. I mean, that's a middle class lifestyle. And if things get more expensive and expand, your basic lifestyle is shrinking. And basically, the amount your net worth does for you is shrinking. So I'm using that same concept, even though it kind of sounds silly. If someone has 100 billion, that could happen to them. It definitely could. And by the way, there's no guarantee interest rates are going higher. Everyone says, oh, they're going higher, this, that, the other. Well, they've been saying that for I don't know how many decades now. And of course, they fluctuate up and down. And of course, they were ridiculously low when they were less than 1%. But there's no guarantee they're going to 3, 4, 5, or 6% anytime soon, or even in the next decade. I mean, you would think they would. I mean, how can they stay this low this long? But if the Federal Reserve is out there and keeps buying the Treasury bonds, they can stay low for as long as they can do that.
Yeah, I mean, there's a couple of other factors with longevity and all that going on. I mean, I've had people in their 70s, even wealthy, say, but, I don't know, what, maybe 5, 10, 15 years? I mean, who knows? Maybe one day, but possibly you may have 30, 40, 50 years left. Now you have the impact of the erosion of your capital over time, and left in the dust with government programmable money and wallets and technology because you didn't take that opportunity to be more active in it, even forming your own thesis and saying no, but at least you put the time and effort into it. No one says this better than Michael Saylor, and we're just about at an end. There may be 1 or 2 audience chat questions that I see came in, but I know my audience has heard me say this a million times, but for many people who are super, super rich, they're buying the Malibu, the New York, the London, the Tokyo homes. They're buying fast rising NFTs. They're buying more stocks. They're buying NBA teams. They're buying things that go up a hell of a lot more than the so-called government inflation of 2 or 3%. Actually, if you wanted to be more active buying more and more and more cryptocurrencies this year, whoa, I can't even put a multiple on that. But could I make the argument, because that's going to get too extreme for people, that for some of the assets that I'm describing, George Steinbrenner purchased the Yankees, the Steinbrenner family, for like $9 million in 1974. I don't know, maybe it's 5 or 6 billion now. That ain't going up 2 or 3% a year. I mean, maybe it's not 20%, but it's going up a lot. So, when I hear we're all about preserving wealth, I hear what you're saying. You got to mitigate risk. You have to be very tax smart, something I'm a big fan of. But if you think that getting below quality returns, depending on the spending rate of the family, and again, relative to others' wealth, which may not matter, but over time, year after year, decade after decade, the wealth will be decimated. Again, it's all relative. I do understand that, like JJ said. This is an opportunity, I think, to take a part of their portfolio and be more active in it and be more active in what's upcoming in the community, so you and your family are going to be more prepared for it. So I would recommend, honestly, just reach out. You'll get more and more content and emails from me as we more formally roll out the consultative program on digital assets, I guess is we're going to be calling it. And there'll be various levels. Again, like I said, some of it could be a 2 to 4 hour group class, somewhat like this, but a little, of course, more structured, longer, and informative from the way of direct, immersive opportunities for one-on-one, opportunity for a New York, a Florida, a California boot camp for 5 or 10 people, including the children. We would probably encourage that. And what you would need to prep and get ready to be able to do the things that we're talking about. And then for some of you, it may be a really all of that plus somewhat access 24/7 to us and the team relative to really jumping in. I mean, just jumping off the cliff and building the parachute on the way down. But you're after doing your late thesis and research, you're all in on this. You want everything at you, way bigger than a fire hose, and you want to be able to interact on it. Any closing comments from your perspective, JJ?
Just that people should definitely at least take the time to invest in themselves, no matter what their level of wealth, and educate yourself, because your best investment is always in yourself. And another thing too, on some of these cryptos, if someone's not sure and they dip their toe in, for lack of a better term, they can always use, I call the strategy, the point of no concern. Like if they do 12 or 15 altcoins and these things move so fast, if they double, you can always sell half, and then it's like the point of no concern and just let the rest ride.
And there's one question that came in. We may have time for 1 or 2 more if you want to do it through the chat feature or something like that. This one from Jeffrey, probably more so for you, JJ. If you currently own Ethereum, should you be staking your coins and switching over to Ethereum 2.0?
So staking is definitely good because you're earning an interest rate, and there are some unknowns with the 2.0, and you do take on some technical risk if it were to be hacked or something like that. But yeah, I don't have anything against staking. I mean, it depends on somebody's personal situation, but yeah, I definitely don't have anything against staking or earning interest on your coins.
And as I give a little bit of a wrap, if a question comes in via the chat feature, we'll have a Q&A, we'll have enough time to answer that. So feel free, as I'm doing a little bit of a wrap, to do that. Like I said, I'm really excited about this. JJ Sowers is just amazing. It's really exciting to have him kind of partnering with him. It's really, really exciting about that. And I think there's tremendous opportunity here. Volatile, sure volatile, and no guarantee you're going to make money. If you're looking at it from that perspective, maybe you lose everything. I have no idea. But the opportunity to educate yourself so you could form a thesis and make your own decisions, to think for yourself, and going through the things that we spoke about. Again, imagine you making your own NFT. It's actually not that hard. Again, probably no one's going to buy it, but who knows? Actually, JJ, didn't you make your own NFT and sold it to someone?
Yeah, I've made several and somebody bought one.
So for my live audience, you should have the invites for what I'm doing tomorrow, Wednesday, and Thursday. That will be a very deep dive into DeFi. I highly recommend it. Thanks to JJ, next week, I believe it's Wednesday at 12 noon, we have on a rapper and a music producer. He had a #1 Billboard about 12, 13 years ago. And like JJ said about music, perhaps even more than art, being something that could really, really explode in the NFT community. I don't mean to get too off center, but I did an interview with someone in the fitness industry. Now, he was a former engineer, so he's a smart guy. And this guy, and I like doing these entrepreneurial things, like this is not someone making 50 to 100,000 a year. He makes over 1.2 million a year in the fitness industry. How he became an influencer and how he's just learning about NFTs. And what happened to him a couple of weeks ago is his main platform for revenue, Instagram, for whatever reason, kind of pulled the plug on him. He had to start over. Now, he's very smart, he's creative, he'll be better for it in the long run, but we're gonna hit a point when the creators, through the Metaverse, through to some degree DeFi, that may lessen the importance of these social networks, the ones that we're so used to, and basically kind of control us to some, in many degree, and certainly NFTs. We are right there, actually, we're technically there right now, but by the time it gets a little more evolved and more adoption, people like that. So one of you approached me, hey, I have a child, awesome. I love the kid, but it's just this college and all that. It's not going to be for him. Money's not going to be an issue. We're a wealthy family. I just want him to be happy and contribute to society. Heard that interview, was very interested in health and wellness, and like really inspired him. And I'm like, dude, do some things even differently than Paul, who I just described, and what I just spoke about with the metaverse, NFTs, and all that. And like you said, and I'm a big believer in Kevin Kelly of Wired Magazine, made famous 1,000 true fans, that you now bring into 100 true fans, and how someone, even in the kind of communities we're talking about, could still make a very, very profitable and successful living, and more importantly, be happy. So this has really been a lot of fun. Again, I recommend following me at Family Office Association on Instagram, Family Office on YouTube. If you're not a member, join FOA, Family Office Association, familyofficeassociation.com. And again, we are ready with a consultative service specifically to this digital assets, on top of my creating an anti-fragile family office. And again, like I said a little earlier, all that I do relative to my immersion in the single family office community, and hopefully being a forward and a futuristic thinker in that community. So we'll have multiple levels within the consultative service on digital assets that we'll be happy to discuss in the pricing. Reach out to me. It's been incredibly busy. I'm back to hosting events again. I'm writing. I got all this going on. So it is a little overwhelming, but I love what I do. Hopefully that comes through to many of you. I'm right sometimes, I'm wrong sometimes, but I'm really, really excited about this, and great to partner up with someone like JJ. Reach out to me for those of you that may hear this from a different perspective, or one of my members passes it on. My direct number is 203-570-2898, and email, and it's all up on the website, so you can find it. Just making it easier for you is Angelo at familyofficeassociation.com. And for the young ones, like all the young ones that approach me wearing Ethereum shirts and knowing so much more on some things that really floored me, they're all about DMing me on Instagram. So that's why Instagram has become really a medium for communication, even more so. And that again shows the dynamic of how the young people are so different. And then you have the generation, my God, that's going to be before the Generation Z. Get in now. There's tremendous opportunity. We hope you all enjoy this. JJ Sowers, thank you so much. And everyone, feel free to reach out. Enjoy your evening. Best of luck. Thank you.
Thanks.